Chinese yuan broke through the psychological barrier of 7 yuan per US dollar this week. The US Treasury later designated China as a currency manipulator, an action that has rattled markets. The People's Bank of China refuted the accusation and reiterated its confidence in keeping the yuan rate basically stable. Is the depreciation of the yuan a sign of competitive devaluation? What short-term and long-term effects does the weakening of the currency have on markets? To discuss these issues and more, I'm happy to be joined in the studio by Professor John Gong from the University of International Business and Economics. We'll also talk with Steve Keen, Honorary Professor of the Institute for Strategy, Resilience and Security at University College London, and Jim Rogers, an international investor and the author of A Warning to Japan. That's our topic. This is Dialogue. I'm Chong Lei. All right, it's time to talk currencies. Let me ask you to all of the gentlemen here, why do you think the depreciation of the yuan occurred when it fell through the 7 barrier earlier this week? And is it such a big deal? Jim?
Well, it fell because America's put sanctions and tariffs on over $500 billion of Chinese exports. If you put huge tariffs on anybody's exports, the currency is going to go down. It's a pretty simple result.
So do you agree with that, Steve? Is it political?
Political is part of it, but I mean, every country is involved in buying and selling its currency on international markets, and speculators, of course, are also there trying to exploit all this. So it's a large amount of noise, quite probably as well. And if you look over the long term, the prices bounced between 6 and 7 for the last 20 years. So I think it's a precipitous fall recently, and clearly that's got something to do with the tariffs. But it may all be speculators' reactions to that, rather than any sustained downturn.
John, is it tariffs? Is it noise? Is it speculators?
Well,
what is it?
It was a drop by 3%, about 3%. I mean, the People's Bank of China's allowance for a daily fluctuation used to be around like 2%. So I think 3% over 2 or 3 days is really not much of a big deal. Second, whether this is purely driven by the market or by the central bank, I don't see any evidence here that is entirely attributed to the central bank. So I think this accusation of currency manipulation is totally groundless. You know, if that's the case, many countries would be labeled manipulator.
Jim, what do you see as the difference between managing a currency?
That's a very, very good point.
And manipulating a currency?
Well, it's a very good point that it's only a 3% fluctuation over the last little while. The currency hasn't gone down a great. 3% fluctuations are nothing in the currency market over a month or a week or so. So it's certainly much more involved with speculators and market action. This is the way the markets work. Now, if they had driven the currency down 40% or something, then that would be a different story. And it might go down 40% because these are serious actions that America is taking. But the market has much more. Now, China, of course, can influence its currency and does, and they could stop it. But 3% is really not very much, and it's hardly a currency manipulator. Not yet, anyway.
So, Steve, how does the yuan-dollar rate actually impact on the effect of tariffs between China and the US?
Well, in some ways, when you put tariffs up, you're going to have a reduction in your demand for your goods, and you'll see the currency go in the opposite direction. So they do attenuate. That's the same thing I expect to see whatever happens with that perennial painful issue of Brexit. You know, increasing tariff barriers being offset by a fall in the value of the pound. So it's a similar sort of thing. All this chaos we're seeing is an inevitable result of having a global financial system with a national currency at its heart. So this sort of nonsense about Trump blaming it on the Chinese, I blame it on the Americans at Bretton Woods back in the 1940s.
Yeah, I had a guest say a similar thing last night. So, John, you know, how do you see the yuan performing in the short term, given these trade tensions and this labelling of currency manipulation?
I think it's going to stabilize. I think you know, the 1-to-7 ratio is more of a psychological barrier. Now it's broken. I don't see it going down too much because if you look at the fundamentals, the exchange rate is fundamentally driven by the trade picture, and the the China's trade picture up until July of this year has been actually pretty good. Total exports and imports have increased moderately, and the trade surplus.
The numbers out yesterday were certainly positive.
Right. Yes, China's trade surplus is actually been widening, increased a lot. In terms of good trade, it's about a little bit over $200 billion of trade surplus so far. So, when you have such a large trade surplus, there's no reason for your currency to depreciate too much. I think that's the most fundamental issue.
Jump in, Jim.
Well, wait a minute. Well, markets, you're talking about the past. Markets look to the future. What the markets are looking forward to is huge tariffs on gigantic parts of China's trade. Yes, China has an unbelievably strong economy and import-export situation. But tariffs of that size are going to affect any country, and that's why the market is reacting. This would be a lot simpler if China would just open its currency market and let the market fully take care of it. Then we wouldn't have this discussion. Nobody could blame China for anything. I wish China would open its currency, but that's Beijing's decision, not mine.
Jim, PBOC advisor Margarine just said in an interview today that China is now better equipped to keep its currency stable compared to the August devaluation of 2015. Do you agree with that? He says that there's now more currency flexibility, the markets are more mature.
That was not 2015 was a 2% move. That's not a devaluation. That was just a normal market move. The press got excited about it, but well, I'm sorry. I follow different markets than you do. Apparently, there's been no devaluation, serious devaluation of the Chinese currency in a long, long time in the markets that I look at, anyway.
I said the depreciation in the yuan that
certainly can have a big effect on its. But depreciation is not a devaluation. I mean, in markets, devaluations are huge and important and significant events. Markets, currencies depreciate and appreciate all the time. Look at the euro, look at sterling, look at the Japanese yen. These things, look at the Korean won. These things happen all the time. You go up and down. Devaluations, you would recognize when a real devaluation takes place. But to your situation, yes, the currency is going down. Apparently, the bank is not interfering too much, but 7 to the dollar is not a very serious number. I mean, nothing to worry about. If it were 13 to the dollar, we should be having a serious conversation. But this is a normal depreciation, given the fact that America has put huge tariffs on Chinese goods, a gigantic number of Chinese goods, and markets have to react. That's the way the world works.
Okay, Steve, let's get back to those statements from the PBOC advisor. Do you agree that China is now better equipped to ensure currency stability compared to 2015?
Well, again, without the wild card of the scale of Trump's tariffs, this is we have a wild card that we're unfortunately forced to acknowledge all the time, so he gets to hear his name all the time. But this move by Trump is unprecedented, and that scale of tariffs he's trying to push, which is a ridiculous situation. He's trying to push balanced trade or an American trade surplus with every one of America's trading partners, which is simply impossible. The only way that could be achieved by doing something else he also would not want to do, which is remove the American dollar from the world's role of the world's international reserve currency. So I don't think anybody's better equipped to do over the world in which a rogue politician is pushing the world's biggest nation to try to achieve the impossible.
John, I know you're eager to come in on this.
Well, I just want to respond to Jim's comments. I think, first of all, China's exports to the U.S. represents actually a very moderate percentage. It's about a little bit over 10% China-U.S. exports compared to the total China's exports. And even though the exports to the U.S. is decreasing, it's very much picked up by exports to European markets, to the ASEAN countries and other countries mostly engaged in the Belt and Road Initiative with China. So, you know, the dollar is not just coming from exports to the U.S. It's coming from the 90% of China's export market. That does not include the United States. So I think you know, the expectation for the dollar's future direction is not just driven by the trade situation with the United States. Second, China's internationalization effort of the renminbi is actually ongoing. There are many, many initiatives on the government's part to try to gradually internationalize the dollar, internationalize RMB. So I think, you know, the question of whether RMB will be totally 100% convertible and freely traded I think it's ongoing. I mean, we're moving in that direction, but we have to do things sort of in a phased approach. China's entire reform effort is very much based on sort of an incremental approach. So I think we're getting there. We're getting there.
That's exactly right. China has been opening up a lot. China has been opening up since 2005, opening it as its currency. It's just that this is not 1919. This is 2019. China is an unbelievably strong country and economy. I would open the currency today. But as I said before, I'm not Beijing. They're doing it their way. They're moving slowly. I would move faster. That's all.
All right, let's talk about the impact on the average citizen, especially in China. Does this mean more expensive holidays overseas, especially to the US? What about importers and exporters? Jim?
Well, it certainly means more expensive holidays to the US, but remember, as was mentioned before, other currencies are not moving the same way that the US dollar is. Some currencies are certainly weak against the Chinese renminbi. So if you're going to some countries, you're great. If you're going to England, if you're going to London instead of New York, you won't be affected very much at all. It depends on where you're going, and it depends on what goods you are importing or exporting. Remember, it's not just the US dollar. There are a lot of currencies out there.
Steve, you concerned that spending on these areas will be dented?
Not a lot. Again, as I said, the currencies are shuffling around. Yuan's rising against the euro as well at the moment, but you know, you look at the strength of global economies, there's so much fragility in different economies. The euro is depressed because it's been running an economic program that actually is designed to depress the economy for 20 years. So that's going to be affecting its currency in a downward direction. The British are caught in the middle of Brexit, which is also quite crazy. Trump with tariffs. China, the main reason China won't open up its foreign currency market is it's afraid of capital flight by its own citizens. So there's so much chaos in the global marketplace. In some ways, one bit of chaos offsets the other, and all we see, you know, volatile fluctuations, but nothing like the devaluations we used to see in the days of fixed exchange rates. But it's a crazy system, and I think the sooner we acknowledge the craziness and say we should go to something like Keynes first proposed of the Bancor, that's the only way to end these relatively pointless discussions and the pointless politics of tariffs as well.
Speaking of chaos, investors tend to love chaos because it means opportunities for arbitrage. What are you seeing in the markets? John?
Well, the trading between US dollar and RMB is, I think the trading range is quite minor. You know, there might be some trading opportunities, but I think it's quite moderate. I don't know many people believing off trading just RMB. But you know, this I want to point out one thing. That is, you know, as reported in Wall Street Journal, how this whole thing came about looks very bizarre to me. You know, they have this discussion in the White House, and President is not very happy, and he's been trying to do this for a long, long time. It's one of his campaign promises, and they reached the conclusion, look, you know, we're going to do that, and they just put out a statement. They together worked out the tweet. Never really turning to the whole process as required by the 2015 law regarding the process of assessing a country as a currency manipulator. There's no analysis, no due process, no nothing. So it's basically a sort of improvised thing without much sort of analysis behind this. As a matter of fact, less than a year ago, Secretary Mnuchin's own office put up a report saying China is not a currency manipulator. How can it be?
Well,
you know, less
3
than
months ago, actually.
So, yeah, exactly. So how come, you know, 3 months ago, 3 months later, that entirely flip-flopped, it changed its position? the law explicitly said it requires analysis of a foreign country's persistent one-sided action. You know, 3 days is not persistence to me. So this is really bizarre to me.
All right, let's go. I'll figure that one out after this very short break. Dialogue will be back. Welcome back to Dialogue. Let me continue questioning our guests overseas. We've got Steve King in Amsterdam and Jim Rogers in Singapore about the possible market opportunities for this currency play. Jim?
Well, if we're talking just currencies right now, I actually own a lot of U.S. dollars, full disclosure. I own the U.S. dollar because there's going to be a lot more turmoil coming, and in times of turmoil, people look for a safe haven. They think the U.S. dollar is a safe haven. It's not, but people think it is. So I own a lot of U.S. dollars, and in coming turmoil, which is going to get worse worldwide, the dollar's going to go higher, not on fundamentals, but on emotion.
What about other markets? Stocks? Gold?
Well, other markets, we're going to be here all day, aren't we? Well, what I'm basically looking to buy, I'm looking depressed markets, Russia. I'm buying some Russia as we speak, Russian stocks as we speak. I'm looking for opportunities in China if this knocks the Chinese market down. I'm looking for agriculture. I'm looking for opportunities in agriculture. This may knock agriculture down further. So I'm looking for things that go down, that get depressed, for opportunities.
Stephen, I saw a picture in Forbes with a caption. It was a picture of the Chinese PBOC Governor Yi Gang, and he's wagging his finger, and the caption was, "No soup for you, yuan short sellers." How do you think the PBOC should be handling the speculators?
Well, the main thing they're trying to do is to stop capital flight from their own country. That China doesn't want its citizens moving money out and buying property overseas, particularly in countries where it's been doing. That's been happening a large amount, surreptitiously for the last decade. So I think China's probably more worried about its own citizens moving money overseas than it is about speculators. Since you can't take a levered position against a currency in the way that Soros did against the British currency back in the days when they were fixed and you did have devaluations, I think the dangers to China from speculators are fairly minor. Again, I think the main issue China's thinking about is capital flight.
Okay, let's bring it back to the trade perspective. Larry Kudlow, the advisor to Trump, has just said that those trade talks between China and the US will still take place in September. You seem to agree, John?
I tend to agree. I think I'm agreeing with this because I think China is still very much interested in reaching a sort of a compromise with the US government. And if you look at any retaliatory measures coming from the Chinese government, not anything really significant so far. So that bodes well. I mean, that's a good sign. And I think, at least from the official statements from the government side, we haven't seen anything that's sort of very strong, very sort of accusatory in nature. So I think in that sense it's good. So I tend to agree with Kudlow. Of course, he doesn't speak for the Chinese government. He speaks for the Trump administration. And if the Trump administration side still wants to talk, I think we're still going to have a talk. We're going to see a talk here.
And Jim, how likely is it that we'll still have negotiations, and even with all this ratcheting up of tensions?
We certainly will have negotiations, and we'll probably even have some good news coming soon because America needs it. China wants it. Markets will rally. They'll think everything is okay. They won't be okay later next year or the year after when things get bad in the American economy. Mr. Trump is going to blame it on the Chinese, the Japanese, the Russians, the Germans, the Koreans, and he's going to come back with more trade war. In his heart and in his brain, he thinks trade war is good. He thinks he can win a trade war. Mr. Trump thinks he's smarter than history. If you don't believe it, ask him. He will tell you. He's smarter than history.
Steve, how do you feel about that read of the Trump rationale?
I think everything has to be explained using Trump these days. You simply start from his personality in a way we've never had to worry about with an American leader, I think, ever before. But to me, the fundamental clash that's going on here is that because the American dollar is the international reserve currency, it's necessarily overvalued. If your currency is used for international trade, people have a demand for your currency above and beyond what they need to buy goods. So that is one reason that drives the price up. And you need to maintain your currency in circulation. So you almost always end up in a trade deficit. The advantage to the country in that situation is because its currency is overvalued, its finance sector wins. And because its money can be used to buy assets anywhere. That's the main appeal of being an international currency to the American financial sector, because it's screwing the American manufacturing sector. Now, Trump is trying to do right by both sides. That's simply impossible. The only way he could do right by both sides is by agreeing to go back to Keynes's original proposal of using an invented currency for international trade like the Bancor. But that's the last thing Trump is going to do as well. So we're stuck in a quandary where all we're going to be doing is talking about what Trump's going to do tomorrow.
So, Jim, you said that Trump should look at history. You know, if we look back in history to the 80s, when South Korea was labeled a currency manipulator, you know, what do you think that achieved? Of course, things are very different now.
Labeling somebody a currency manipulator is good for politicians. They get on TV and in the press, but it really doesn't have much practical. You know, in the end, the markets are really more powerful than all the politicians in the world. Yes, central banks and politicians can have a temporary effect, a short-term effect, but in the end, the market has much more power. And in the end, the market is going to determine what happens to the dollar, the yuan, the renminbi, all of it. I just wish, to repeat myself, that China would open its currency completely. They have nothing to fear. Yes, it might go down for a while, but if it goes down, well, I assure you, I will be in there buying the renminbi as much as I can if it goes down.
All right, you have said that 3 times, Mr. Rogers. Do you think that markets will actually correct the effects of Trump? Steve?
The markets are always offsetting the effect of Trump, but again, the only way Trump can have a real effect is by not fighting against the market, as Jim has been saying, but by changing the legal arrangements for the market. And that, again, as I've said, bring in the Bancor, that would end all the currency speculation in one go, or rather reduce it by a factor of 100 and have us speculating about an international reserve currency, not about a national currency as we do right now. But again, these are all things that aren't going to happen. We're going to be stuck in these pointless discussions, unfortunately, about pointless moves by a pointless politician.
All right, John, let's try not to be pointless here. You know, what are the next steps in this labeling? And then, you know, markets seem to have absorbed it. In fact, U.S. stocks bounced back on Thursday on positive China trade data. Where do we go from here?
Well, in my opinion, there are many real consequences of substance after labeling China as currency manipulator. You know, one of the consequences is that you know, Chinese companies cannot participate in U.S. government public tenders for procurement. China's not participating in this anyway in the first place. Another thing is that, you know, it may have implication for fundraising. Yeah, raising funds on Wall Street. Well, Chinese companies are not doing that much anyway in these days. Another consequence is that it will talk to the IMF, you know, in looking into China's macro policies. What does that mean? That doesn't have much of a real consequence either. So I think you know, this is very much a political play. It's a campaign promise delivery. It's trying to win some political points. Other than that, I think it's a very hollow thing. I mean, it doesn't really have much substance in it.
Jim, do you think the U.S. will really slap the extra tariffs on the $300 billion of Chinese imports starting September? Another pointless question.
Yes, certainly will, unless the September meeting. No, it's not a pointless question. They're certainly going to do it, unless, of course, the September meeting quickly comes to some kind of resolution. I don't know. Mr. Trump seems to think, and I don't know what happens. He wakes up one morning, he has a feeling, and he does something. Whether it's well thought out or not, it doesn't really matter. He's the president, and so he gets away with it. And that's one of the things that the world has to deal with, and that markets have to deal with. Sure, he's going to keep doing things. As I said, he thinks trade wars are good. He thinks he can win trade wars, and he thinks he's going to show China and the world that he's very, very smart.
So what happened to
No
the
one
checks
has
and...
ever won a trade war. No trade war has ever been good.
I hope
No
he's
trade
watching.
war has ever been good, but Mr. Trump thinks he's smarter than the rest of us.
When he got elected, you know, all the political analysts were saying that there would be checks and balances in place to keep him from, I guess, abusing his powers. What happened to that? Anyone
There are
want to take...
checks and balances, but they don't affect his tweeter. He can tweet as much as he wants, no matter what the Supreme Court says, no matter what Congress says, no matter what anybody says. He can tweet, and he will.
This is a very good point. I know so far it's still a tweet. The imposition of the, you know, the 10% tariffs on $300 billion of Chinese exports to the U.S. is still very much a tweet. There's so far there's no, you know, official government report or any order, any decree yet. It's still a tweet. So
you're saying he can take it back at any moment?
I think he can take it back anytime he wants, and I think there might still be a possibility that we're never going to see that tariff at all. I mean, that's a slight, very, very slight possibility. I don't know. I mean, that's up to him if the negotiation is going well. I mean, we have to keep in mind, it's not like before the face-to-face meeting taking place in September, the two teams are not talking. They're still in close contact, maybe as we speak right now.
China is playing this well, at least at the moment. They've said we're not going to buy American agriculture. Mr. Trump would not be president if it were not for the American farmer. And if he keeps hurting them more and more, or if China keeps hurting them more and more, that's putting a pressure on Mr. Trump, probably better pressure than anybody else, because those votes, if he loses those votes, he's not president anymore. So China's playing at the moment very well.
Steve, what do you think the impact of these new tariffs would be?
Sorry, I think what it's going to push is China towards trading with the rest of the world and forming a trading bloc between itself, Russia, and particularly Europe. And I think everything that's coming out of America is making everybody else look to somebody other than America as a stable partner. And so I think that's going to be the major change. The Belt Road Initiative is going to be much more welcome now by countries receiving it than it was before all the craziness with Trump. It also gives China a different direction for getting its manufactured exports out rather than across the Pacific with the craziness of Trump. So it's all going to, in some ways, it's a sign of the diminution of the American empire, not an increase in its strength. The one thing that might be interesting for Americans, this might counter the impact on the farmers to some extent, is American manufacturers in China deciding they've had enough of having their supply chain disrupted all the time and deciding to relocate production back in America again. That, in fact, is what Trump is actually playing at doing. He wants to cause enough chaos to have that outcome. And I think it's happening to some degree, but of course far less jobs will come back now than were exported back in the 80s and 90s.
Thank you so much to all our guests today for joining us for this episode of Dialogue. That was Steve Keen joining us from Amsterdam. He's an economist at Patreon, and also Jim Rogers, who is an international investor, as well as in the Beijing studio, John Gong from the University of International Business and Economics. That was our topic. I'm Chen Lei sitting in for Yang Rui, and this was Dialogue.